Hello, thank you so much for joining us today. My name is Jen Rosenthal and I lead communications for Grayscale. We're thrilled that you have chosen to join us for our very first live stream event. And the topic is one that's really relevant. It's the Bitcoin halving. So we're going to give folks a couple of minutes to trickle on. This is going to be streaming across all different social platforms. And to start, we're actually going to kick off with just a quick poll, just to gauge who's watching and your level of exposure to crypto. I'm supposed to do something. I don't see anything, so I don't know if you, okay, there we go. Okay, so the first question that we have is, do you invest in crypto? So we're using Slido today, so you can actually scan that cool little QR code and plug in your response. Okay. We have 100%. I guess that makes sense given if you follow Grayscale, you probably are at least remotely familiar with crypto. Okay, we have a second question. But I'm gonna give folks a couple minutes because it's only 1:02. So we're gonna give folks until about like 1:04, 1:05. Okay, so we have some dissenting. We have some folks who don't invest in crypto. So we're really excited to have you here with us today to talk about Bitcoin, the fundamentals, the halving, all that good stuff. Okay, and so our next question is, if you have invested in crypto, have you invested using a Bitcoin ETF product? You can go future, you can go spot. I think we have levered now, so you can pick your favorite ETF product. Okay, so we have a little bit more versatility, variability on this one. Okay, so we have 53% who have said yes, 48% who have said no. Really interesting. 55 yes. All right, 57, 60. You guys, we got a lot of Bitcoin ETF users here. Okay, we're at 61. So for those tuning in, we have our webinar will be starting shortly. We have a couple questions on Slido just to fill some time to gauge who you are and your experience with Bitcoin investing. And we're going to introduce the panelists momentarily, another minute or so. All right, we have 63% who have used Bitcoin ETF products. That feels really good, given this is only 2 months in. I feel like it's much harder to do that. It's just like be a talking head and to fill the silence on some of this stuff. And I watch a lot of news. Okay, let's give it. I think we can get started. So I'm going to toggle out of the Slido, but keep the Slido open. And if you have questions throughout this, feel free to enter your questions into that Slido account or post a comment on any of the social media platforms. So thank you again for joining us. Again, my name is Jennifer Rosenthal, and I lead communications here at Grayscale, and I'm thrilled to be joined by this incredible group of panelists. We're going to be talking about the Bitcoin halving today. It's a question we're getting, it's a topic we're getting a ton of questions about. So we thought we would pull together some folks across Grayscale's business to talk about it from the lens of, the investor, research team, the institutional investor. And so the questions that you all have submitted in advance, thank you for those. I have incorporated them into this trusty little iPad. So I have a little outline of those questions. So thank you for those. And if you have additional questions, as I imagine you might, around any other part of Grayscale's business or our product suite, I invite you to submit those, and we're actually going to create a new content series called Grayscale Gets Real. And we're going to answer some of those questions. But this conversation in particular is going to be really focused on the Bitcoin halving. So panelists, hello. Thank you for joining us today. Let's start with a round of introductions. Let's do name, title, how long you've been at Grayscale, and maybe what was your foray into Bitcoin.
Sweet. Hi, Jen. My name is Michael Zhao. People call me Zhao because there's 4 Michaels at this company.
Which is crazy because there's only 85 of us?
Yeah, there's not too many. Yeah. So I'm part of the research team. I've been with Grayscale for over 2 years now, and I would say my first experience with Bitcoin is actually reading the Bitcoin white paper. I actually didn't understand any of it the first time I read it. But then played around with the protocol, and then after I experienced using it, it was like, this is game changing.
You had an aha moment.
Aha moment, yeah, exactly.
Well, thanks for having us, Jen. I'm Krista Lynch. I'm on the ETF team here at Grayscale, where I lead ETF capital markets. I've been here for 2 years, and my first Bitcoin memorable experience was I was interested in Bitcoin as a technology, and I took a class on the economics of blockchain.
Yep.
And it really opened my horizons to how many applications it has, all the different things that crypto, blockchain, Bitcoin can all be used for, and led me here ultimately.
Amazingly progressive college.
Yeah. My name's Danielle Bebo. I focus on strategic accounts and partnerships here at Grayscale. I've been here for a little over 3 years now, so it's been a while. And I first actually bought Bitcoin back in 2014 before I even had a bank account or a debit card or a credit card. So it was really my first foray and first access into financial markets generally.
That's pretty amazing that you had Bitcoin before a bank account. Okay, you heard it here first. Okay, so let's start. Since we're streaming across multiple platforms, I assume if people know us, they likely have heard of Bitcoin. But in case there are folks who are joining who are not familiar, let's go basic. So what is Bitcoin? So the simplest question I could possibly ask you.
Yeah, so on a technological level, Bitcoin is a distributed ledger technology that basically allows you to permissionlessly transact with other people without relying on a centralized third party.
Okay.
Yeah.
And how do you explain that to our investors?
Yeah. We think about Bitcoin in kind of 3 verticals. A means of payment, which is what a lot of people might first come to mind, and it's often used for remittance payments and things like that still. The second, which kind of resonates the most, I think, with our investors, is as a store of value. So as an inflation hedge in a world where, different governments and money supply can be really unpredictable.
Yep.
That's what we're here to talk about today, is Bitcoin supply is predictable. It's fixed. And so, this store of value, kind of a digital gold, is the second use case. And then the third is as a technological innovation, right? Bitcoin is new. Yeah. It's almost like a VC tech type of investment. And so people think about it from that regards too, and we're always finding new use cases.
So Bitcoin means different things to different people, but fundamentally it's a technology, right? This is ultimately code. Is that right?
Yeah, it's code that's distributed across thousands of node providers all around the world.
Node providers. We're going to get into that. We're going to get into that. Okay, so let's look at the halving specifically. So Danielle, you talked a little bit about how this is actually for, this conversation is about supply. So what is the halving, and why was the Bitcoin protocol built with the halving incorporated into it?
Yeah, sure. So the halving is a pre-programmed event, part of the Bitcoin code that basically, about every 4 years, the supply issuance of Bitcoin gets cut in half. The way Bitcoin is issued is through miners.
Okay.
Miners compete to basically build these blocks. And after each block, they get a fixed Bitcoin reward. Every 4 years, that gets cut in half. So this time, right now, currently, the block reward is 6.25 Bitcoin per block. And after the halving, it's going to be 3.125.
Okay. So Bitcoin comes into the world through mining.
Yes.
Miners get rewarded in Bitcoin. There will only ever be how many Bitcoin?
21 million.
21 million Bitcoin. And that is a fixed number. How do we know that that's a fixed number?
It's part of the protocol, so you can see it in the code.
In the code.
Yeah.
Okay, so it's in the code, and so every 4 years there's this halving. What is the significance, I guess, from an economics perspective of this halving effect? Why is it interesting? Why was it built in that way?
Sure. So when you think about how, traditional governments and regulators kind of print money, they create money supply, and that can be on an unpredictable schedule. It's based on, economics, and based off fiscal and monetary policy. With Bitcoin, instead of having, money supply that can be unpredictable and how it's changing, it's fixed. So every 4 years, the amount of new Bitcoin that's created per block, it gets cut in half. So it just lets people kind of see it as more of a store of value and gets us closer and closer to that 21 million.
Yeah. So, Krista, I guess from your perspective, we were joking before, how do you identify?
As a normie.
As a normie.
I'm a TradFi normie.
I probably do too. This is going to be my first Bitcoin halving working in the crypto industry. So as someone who's more on the kind of institutional side, how do you think about the benefits of a fixed supply?
Yeah, it's really just economics 101. So if we reach that supply cap where the 21 million Bitcoin are out in circulation, but demand continues to increase, and recent catalysts indicate that they will, it means that in order to reach equilibrium, kind of the only variable that can change is the price or the value of Bitcoin.
Right.
And so in a case where we have the 21 million Bitcoin already in circulation, demand is continuing to go up, we would expect the price to go up, which investors would realize. Now, one question that we get from the ETF capital market side of things is, given that Bitcoin ETFs have to buy and sell Bitcoin in order to meet the share demand in market, people sometimes ask what happens when there's no more Bitcoin. And that's actually not really what will happen. The value of Bitcoin will continue to go up. The ETF will continue to buy Bitcoin, and everyone that's involved in the Bitcoin ETF, Bitcoin itself, will realize that price appreciation as well.
Okay, so supply-demand dynamics, Bitcoin is pretty unique because I guess you can print money and you can mine gold, right? So I guess if you're comparing Bitcoin to any of these assets, it's interesting there. So so you said every 4 years we see a new halving. Can we look back? Can we look back at past Bitcoin halving events? What trends have you all seen emerge from past halving events?
Yeah, so I think the most obvious one is the price tends to go up after the halving.
Okay.
Every time price has gone up, after 3 months, 6 months, 9 months. That's probably the main trend, I'd say, with Bitcoin halvings.
I was actually looking at some of the data before we sat down. And so when you look, the past 3 Bitcoin halvings, November 2012, July 2016, and then May 2020, in the following 3, 6, 9, 12 month periods, there's only ever been one time. It's following that July 2016 halving. 3 months later, Bitcoin was down 5%. Other than that, Bitcoin has been up in those periods following every halving. And we're happy to provide the data if you want to email us at info@grayscale.com.
And I might add, we've never had an ETF in the marketplace for a halving event. So this is kind of the first of its kind. And the ETF is also driving demand and interest for Bitcoin, which should push the price up.
Okay, let's pin that for a minute. Let's focus on the stakeholders. So in past halving events, I guess I want to go through a list of the different stakeholders in the crypto ecosystem, and maybe we could talk a little bit about them. But how does this affect the miners, right? So you mentioned the nodes, the miners who are bringing Bitcoin into the world. If there is less Bitcoin to mine, what does that do to those businesses?
Yeah, so miners are probably the primary stakeholders you think of when you talk about the halving. Their revenues get cut in half in Bitcoin denominated terms.
Right.
So typically, before the halving, and we've seen it this cycle in Q4 2023, they've been selling Bitcoin consistently since that time period. At the same time, a lot of these public miners have been issuing equity, they've been issuing debt. They've also invested in a lot of these higher powered machines.
Yeah.
So you've seen hash rate go up. You've seen profitability on average per miner go down. They were just kind of like giving themselves a capital buffer just to prepare for this event that cuts their revenues in half.
For those who might not know, what is hash rate? Hash
rate is kind of like a proxy for measuring how difficult it is to mine a Bitcoin.
Okay.
So if you see hash rate go up, typically that means like it's harder to basically mine a Bitcoin. There's another value called hash value.
Okay. Let's get into it. I've never heard of this. Okay.
It's kind of like measuring basically the revenue, the profitability per miners on average, and that has been actually going down.
What does that signal to you?
So that means a lot of miners are kind of fighting for the same pie, and it's like the fixed pie size right now, and it's going to get cut in half in the future. So that means there's just more competition on the miner side.
Is there a risk that miners are less interested in mining Bitcoin because of this, or are the kind of positives of some of the past halvings around like price appreciation compelling enough that they're going to kind of stay in the game?
That's a good question. From my perspective, it seems like a lot of these miners, they're basically just like investing in a lot of new equipment, trying to price out competitors. Because I think eventually what's going to happen is there's going to be a shakeout in in the mining ecosystem. Some players are going to be at the point where they're like below break even, and like after a few months they can't like sustain operations anymore, so they get acquired by a larger player. And so it's kind of that competition right now, trying to like price other people out.
So if you're a reporter, you can pay attention to M&A activity potential in the mining space?
I'd say so, yeah, in the next few months.
Okay. Let's pivot to another stakeholder, Bitcoin owners. I mean, I would probably say that there are those who own Bitcoin directly, and then there are those who own through, a centralized player like a Coinbase or some sort of an exchange, or through some sort of an ETF product. So Danielle, I guess, as someone who's talked to a lot of investors throughout your career, how do you think about the impact on?
I think investors should absolutely understand what's going to happen, what it could mean, but they should also not worry. There's nothing they need to do.
Okay.
It's not as though, the amount of Bitcoin you hold is going to get cut in half. Nothing crazy is going to happen. You don't actually need to take any action. I would say you can kind of just watch, you can learn, you can understand, but there's nothing to, worry about, nothing that they actually need to do in terms of action items.
Okay. And ETFs have changed things up a bit. I mean, this has been pretty unprecedented. Have ETF participants engaged in a Bitcoin halving event before? Let's start there.
Yeah, so I would say a lot of the liquidity providers that we work with, which are basically professional crypto traders, they have been around in prior halvings, but not to go through the ETF workflow. And so we've been asking them, what are you guys seeing? A lot of times they do work with miners to help them sell the output of mining, but for them that is such a small portion of the liquidity that they have access to that it doesn't really make a material impact, even if that's cut in half. So to put that in perspective, if 900 Bitcoin are mined in a day right now, that might be like less than 1% of the total Bitcoin traded in a day. So you cut that in half and it's just not a material impact to their daily function.
For those of you who are joining, thank you so much for joining us. My name is Jen Rosenthal. I'm here with this incredible panel of Grayscale colleagues, and we're having a conversation about the Bitcoin halving. If you have questions, we have taken questions in advance, and they're in this trusty iPad, and I'm working my way through them, and we're going to take questions at the end, and we'll share a new kind of content series called Grayscale Gets Real to answer any of those questions. So please, please, please submit your questions, because we want to make sure that this is as valuable for you all as possible. Okay, so let's pivot to the investment fundamentals. We obviously have seen kind of tremendous maturation of Bitcoin as an asset following kind of the ETF, but there's also, Zhao, you love ordinals. So I guess what's different this time around? And maybe we can kind of dig into some of those things that are impacting that kind of supply-demand trend.
Yeah, so I mean, we covered the ETF flows a little bit. I'd say like from an on-chain fundamental perspective, so there's this one guy and he created Ordinal, like the Ordinal protocol.
Just like one guy.
Literally one guy, which is crazy. And in late December 2022.
Okay.
And since then, like Bitcoin is just on-chain activity has just exploded. Like Bitcoin in Q4 of 2023 was like the largest NFT platform, which is like you don't think about that. Like when you think about Bitcoin, you think about like hardcore like Bitcoiners, like transferring value between one another.
Can I interrupt you there for a second? Yeah. So why is that? Why is it that people don't think Bitcoin and think on-chain activity?
I think historically, there's a saying that Bitcoin, not crypto. It's like Bitcoiners are like traditionally have been like pretty hardcore, and they kind of had to be. I don't know.
It's a good. No, this is great.
Yeah. I mean, they've existed since the beginning, and they've had to like face death like numerous times. I'd say in the past, like
death as in like the death of the protocol. Or?
Yeah. Like people have been calling for the death of Bitcoin, which is a weird thing to say, but like since like hundreds of times in the past.
It is bizarre because it is a technology, so to call for the death of a technology is wild.
So I mean, to hold throughout that entire period where there's like a lot of bad vibes around, that's probably the best word to think about, but like it takes like a lot of determination and sort of like you have to be kind of like tunnel vision
Yeah.
in a way. So the reason why like people think that Bitcoin's traditionally like an ossified chain, which it isn't now, but like traditionally that's how people have perceived it.
Yeah.
It's just a testament to the people that have been holding since the beginning.
So why did they start to build on Bitcoin? Because I mean, the other option is to go to another smart contract platform, right? So these are like base layers for building. So you could go to an Ethereum, a Solana, and pick your poison. But why did why did developers choose to start working on the Bitcoin blockchain?
Yeah, that's a really good question. I mean, obviously, like you said, it's like really easy to build something on a smart contract platform.
Yeah.
Bitcoin isn't Turing complete, so it can't have like smart contract logic like Ethereum.
Explain that again to me slower.
So like Turing completeness is like it's
Okay.
like basically you can just compute certain things.
Okay.
You can do that with Ethereum, the EVM, which is the Ethereum virtual machine, but on Bitcoin they have Bitcoin script, which you can't do. There have been attempts in the past actually to build on top of Bitcoin.
Yep.
But they have never been that successful until ordinals came out, and I don't think anyone was really expecting it. It was literally just one guy.
Yeah.
He created ordinals, and then it didn't really do anything for a few months. But like in April 2023, that's when activity really picked up. And basically, what it is like you can basically inscribe data to Bitcoin transaction blocks in the transaction part of the block, and assign certain pieces of data to specific satoshis, which is the smallest denomination of Bitcoin.
Got it. Okay, so Bitcoin can be broken into multiple I think it's 9. Is it 9 or 8 decimal points?
I think it is 8. 8. Yeah,
Okay.
yeah. It's 100 million.
For the ETF.
It's 8 for me, so it's
Yeah.
probably
It's
8.
eight.
It's 8. Okay, so it's 8 decimal points. Those are all called satoshis.
Yep.
So now you can. So okay, let's put a pin in the Bitcoin ETFs. We'll come back to that. But so now you have activity kind of taking place in a new way via the ordinals on the Bitcoin protocol. Why is engagement likely to impact supply?
Yeah, so I mean, if there is more engagement, the logic is that people are going to use Bitcoin more.
Got it.
And so there's more use for Bitcoin besides just holding it.
Okay,
Right.
so then going back to Danielle's, the idea of the multiple use cases.
Exactly.
This is using Bitcoin as a tech.
I would say
As-
so.
Yeah.
This is a new use case besides, means of payment, which is just transacting, and a store of value, which is basically just holding on to it. And this is a time where we're actually using it and building on Bitcoin, which is kind of cool.
Okay, so Danielle, I'm going to stay with you. What are you hearing about the Bitcoin halving from financial advisors and investors?
I think for them, they're still just entering this Bitcoin ecosystem for a lot of people, and they're learning about it, and they're trying to understand why Bitcoin has value. And this is kind of an opportunity for them to see that in action, right? They're literally seeing Bitcoin's supply schedule working, and they're seeing these changes that we always talk about. Because the last Bitcoin halving was back in 2020 when the ecosystem just looked very different than it does today.
Yep. And Krista, I guess now kind of wrapping it back up into the ETF conversation, what are you hearing from some of these institutional players? How are they thinking about this, understanding that it is the first time that they're going to be kind of operating their kind of businesses in this new limited supply environment?
Yeah, so investors themselves, I would say very limited questions. You have to keep in mind that a lot of people that have gotten into the Bitcoin ETF, this is a very accessible means of investing in Bitcoin and crypto generally. So there are a lot of people that are very new to crypto. Hopefully they're tuning in to learn about this. But who we're talking to about the nitty gritty is really our liquidity providers who are working with miners to potentially help sell their Bitcoin. But again, there's very little impact to them given how much liquidity they have access to.
So I'm going to double click. What is a liquidity provider?
Sure. A liquidity provider for us is effectively someone who professionally sells Bitcoin and other cryptocurrencies. And in the capacity of the ETF, they buy and sell Bitcoin when we have ETF creations and redemptions. That effectively means that when there are new shares of the ETF created, it takes in Bitcoin.
Got it.
When there are shares redeemed, it sells Bitcoin. And that keeps the price of the shares in parity with the price of Bitcoin.
Got it. Okay, so what happens, I guess, looking a little bit ahead, when there is no more Bitcoin left to mine?
So basically the security budget. So the way Bitcoin is secured is basically through mining activity.
Yep.
So the higher the hash rate, the harder it is to take control of the Bitcoin network. Right now, those miners are subsidized through block rewards.
Got it.
So they're getting paid to secure the network for the most part.
Yep.
When it hits the year 2140,
Okay.
which is when theoretically the last Bitcoin will be mined, because at that point the rewards are going to be lower than 1 Satoshi, which is the smallest denomination.
Yeah.
all of their revenues are going to stem from basically transaction fees.
Okay, so we just jumped ahead a lot there,
Yeah.
and I want to maybe back up a little bit because
Sure.
I don't even think. Do we say when the mining? When is it the halving happening?
Oh,
Do we cover that yet?
No, not
When
yet.
is it coming?
Probably should have done that earlier,
Yeah.
but April 20th this year.
April 20th this
Yeah.
year. Is that a crypto joke?
It's not. Surprisingly, it's not. I can't believe it's actually.
It's April 20th.
It's around April 20th. Yeah.
Crypto is a gift that just keeps on giving. Bitcoin is a gift that keeps on giving. So if you're tuning in, thank you so much for joining us. I'm Jen Rosenthal. I'm here with an amazing panel of experts from Grayscale. We're talking about the Bitcoin halving. Please add your questions. Let's pivot to the future. So we just said it's April 20th. What actually happens on April 20th? So like what technically is about to happen?
Honestly, nothing that dramatic happens.
Okay.
Basically just you'll see on like the block explorers that the block rewards, instead of saying 6.25, it says 3.125. That is the only change.
That's the only change.
That's the only change, yeah.
Okay. All right. So we've talked a bit about what investors can expect. Is there anything else that like investors should know or pay attention to?
I think it's kind of just reiterating that it's kind of anticlimactic from their perspective. I think a lot of people hear of this halving and they're like, oh, like, what do I need to do? What do I need to expect? And like Danielle said, you kind of just sit back and watch it happen.
Okay. This is also kind of a big year for elections. We talked about investors. Are there anything that like policymakers, regulators, government should know or be paying attention to?
I think we're in this new paradigm, this halving versus 2020, 2016, or any other, where their constituents, people they literally represent, are largely investing in Bitcoin and in crypto generally. So policymakers and regulators have, this responsibility to educate themselves and to learn, even if they're not personally interested in investing, to understand, just like they would any other investable asset, that the people they represent have the opportunity to buy.
Yeah, and I guess the ETF makes that a little bit easier.
100%. I think a lot of people were intimidated by having to open a wallet or having to do any of these things that came with investing in Bitcoin. And now if you have a brokerage account, you can buy a Bitcoin ETF, and it's probably a very similar experience to what you're used to as a TradFi normie. So yes, I think we just got back from London too and saw some traction there. Yeah. I think politicians don't really want to be left behind. So you're seeing globally some, follow on after the ETFs went live in January.
So this is a great reminder that this is a tech, right? Bitcoin is a tech protocol. So if I'm understanding correctly, investors don't have to do anything. Policymakers and regulators don't have to do anything, except for learn and kind of keep an eye on what's going on in the ecosystem. Do miners have to do anything?
They don't have to do anything either. They're just like, the things they have to do are more like on like the company's strategy side.
Yeah.
So they have to, again, like make sure they have enough capital to survive, basically. So there's different ways they're doing it. One way is issuing debt and equity. Another way is selling a lot of Bitcoin. Something that I've noticed for at least some of the larger publicly traded miners, they've been trying to differentiate themselves. So you see Marathon, which is one of the larger, mining equities. They're differentiating themselves in a way that they can produce really big blocks, which is like, kind of random, but they have like
what does that mean? To produce a big block is just like to validate a larger group of transactions on the Bitcoin network?
Yeah, so they can validate like one Bitcoin block just by themselves without yeah. And so it's kind of funny, like they just like kind of did this kind of to flex, it seems like, pretty recently. French Montana released, like they inscribed an ordinal of French Montana as like a song.
What
on the
song?
Bitcoin. I forget the name.
I
forget the name. I can't sing. I forget the name, so no, I'm not gonna do that. But they did it, and it was like, I don't know. It's like a way to differentiate themselves from other ones. There's also Clean Spark. They're differentiating themselves with like clean energy.
Cool.
Other larger miners have different other ways of doing it. They're like trying to like distance themselves from other other competition, if that
Got
makes
it.
sense. Yeah.
To piggyback on that briefly, one comment we have gotten from liquidity providers is that the miners can kind of toggle how much Bitcoin they sell as a proportion of what they mine. And so in order to increase their revenues when they're cut in half in terms of the rewards, they may actually start to sell more Bitcoin. So from the perspective of the secondary market, we may actually feel a similar number of Bitcoin coming to market. And that's simply because it's a higher percentage of mined Bitcoin actually being sold.
Interesting. So this might be a very silly question, but how will we know when it's happened? Like, is there, I mean, I guess we'll post about it on Grayscale social channels. Shout out Grayscale social channels. Yeah. Are you just going to let us know?
I'll let you guys know.
Yeah.
No, you can go on a block explorer, and it's like really, like, just like, if you just click on a block, go to like mempool.space, go click a block. It says the block rewards 3.125. You're like, okay, it's happened.
Or you can email info@grayscale.com.
Yeah.
and Zell will confirm for you.
Yeah, personally, I'm just kidding. I won't do that.
Okay, so we talked about the last halving, and you said, when is that going to occur?
This next one.
Yeah. No, the last one. So this one is April 20th of this year.
The year 2140.
2140. Yeah. Okay, so now looking ahead 2140, what do you think like future generations are going to be talking about related to the Bitcoin halving?
I think they might be like, wow, like Bitcoin is inflating like 6.25. I don't know. I don't know if they're actually going to say this, but they might be surprised at how much Bitcoin was inflating in the past. But yeah, I guess at that point, like most of the miner fees are going to come from transaction activity, so they won't really know. They'll only know about like Bitcoin having a 21 million supply as opposed to like a inflationary supply, maybe.
I think, and this is also just me thinking, I think when they look back, they'll be like, wow, I wish I bought Bitcoin, in 2024, in 2012, and literally any of these other years, because that's how I feel now when I look back at like the 2012 halving. I'm like, that would have been great. So yeah, I mean, I think they'll think about that. And I think they'll also, like, the mining of Bitcoin by then will just be so much more efficient. Like, we're already at a place where you can't just, plug in your laptop in your college dorm room and mine Bitcoin anymore. Like, these are crazy powerful computers. And I think it's just going to get even more impressive.
Yeah, and the mining space, from what we're hearing, is getting much more grown up and sophisticated. So I agree. I think, it's gone through a lot of evolution, but it's going to be more institutional.
So I guess, is there anything else I didn't ask you about the Bitcoin protocol or the Bitcoin halving? Because I actually want to talk about how this might affect the crypto ecosystem more broadly. But is there anything that we didn't cover off?
Nothing comes to mind.
No? Okay. So what are the implications of the Bitcoin halving event on the broader crypto ecosystem? Like, have we seen, in the past, ancillary effects?
I'd say, in terms of specifically the supply issuance, I think in the past,
The what?
The supply issuance.
The supply issuance.
In the past, many of the coins from that era, in like 2012, like Litecoin, Bitcoin Cash, I mean, all of them kind of base their supply issuance model off of Bitcoin.
Okay.
So those coins have halving cycles. Litecoin has one, Bitcoin Cash has one. But I think these newer coins have different ones. So I think, Bitcoin's supply issuance is kind of like the prototype for a lot of these newer coins in terms of supply issuance. I'd say,
Ecosystem-wide, I would say that the timing is very fortuitous, other than being on 420.
Nice word.
So with the Bitcoin ETFs coming out in January and now the Bitcoin halving happening just 3 months later, it's been kind of like a 1-2 punch of news cycle items for people to hear about and get curious about.
Really
and we've seen a lot of people reaching out to us, especially now that there's such an easy way to invest. People who were crypto curious and are now getting involved, it's really the tip of the iceberg for them. So someone who didn't even know what Bitcoin was, maybe now they're going to learn about other protocols, they're going to learn about staking, they're going to learn about all these other things. So I think ecosystem-wide, that's kind of what we're seeing.
Yeah, it's this interesting idea because I do think that when I first got into Bitcoin, I thought you would have to buy a whole Bitcoin. And I didn't really understand that you could actually buy a Satoshi or a share of an ETF. Danielle, are you seeing anything?
Yeah, I think that historically we've seen Bitcoin kind of lead the rest of the crypto space, both by market cap and just by returns and everything. So, people start out by looking at Bitcoin and investing in Bitcoin. And then to Krista's point, you kind of alluded to this, then they're like, oh, what's Ethereum? What's, Litecoin? And they kind of keep going down the market cap spectrum into these more like esoteric, like kind of VC oriented tokens.
So what's after Bitcoin and what's after Ethereum, right? I mean, that's the $1 million question is like, what's next?
Yeah.
Well, in the ETF space, we hope Ethereum. We actually have a filing out for it, so we know there, but we'll find out what happens next.
I also think we can give a little shout out to Grayscale crypto sectors.
Yeah.
I mean, right?
Yeah, 100%. I think for people that are trying to learn about how to classify it, again, TradFi normally, like the GIC sector, it's kind of our way of looking at how you can think about it in digestible ways, but look at multiple tokens.
Okay, so we have the starter, the gateway is Bitcoin, maybe Ethereum. Then we start to look at some other kind of indices or index funds, and then we have actively managed products.
Yeah.
So we're talking about the Bitcoin halving, but this is an entire asset class.
And don't forget, there's also equity thematic products. We have one of those that's invested in 12 different miners.
Okay, we're plugging it. We are plugging it right now. So I guess, how does the halving for Bitcoin, like thinking about TradFi, differ from kind of the way that fiat is brought to the world, or any correlation you might make around inflation, knowing that's really top of mind for a lot of, particularly heading into a voting year, like a lot of people are thinking about inflation?
Yeah, if you wanted to compare, Bitcoin to fiat, Bitcoin has like thousands of nodes. It's decentralized. There's really no central party that you have to trust. Fiat, there's you have to trust the banks. You also trust like one node provider. So it's like, it's different, right? There's you have to trust like banks to manage your money correctly, and you also have to trust the government to manage the money supply correctly. So there's 2 layers of trust there that Bitcoin does not require.
I guess we're going to wrap soon, but on the way out of this conversation, for those who are following, who may be investors, who may be crypto curious, if you could give them one piece of advice on something to either pay attention to or to keep in mind as we're heading into the halving and after the halving, what might that be?
I would say, to educate yourself, reach out to Grayscale at info@grayscale.com, and we're happy to have a call, serve as an educational resource. But that's really like kind of the first step anyone can take into understanding the space, and it's constantly evolving, and you can't just read one article and know everything. You're constantly having to learn and kind of refresh your knowledge.
Yeah, I'd echo that. I would say don't be intimidated. I work with professional investors every day, and a lot of them don't necessarily know how Bitcoin works. They don't know how an ETF works, and they don't know how the junction of those work. So we love to educate. We love to talk about it. Please send all your questions.
Yeah, I'd echo them. Also, I'd say, Bitcoin is best experienced. Like, you might read about it, you might not understand the first time around. It's like it's kind of hard, but once you experience it, it's something that kind of clicks.
Okay, so you heard it here first. Go play around with Bitcoin. So for those of you who are joining us, thank you so much for joining us today. We hope you found this valuable. This was our very first live stream event. We hope to do more of it. So we would actually love your thoughts. So in addition to answering some of your questions in content that we'll share on Grayscale's social channel, we have a very short survey. And we're really hoping just to get your honest feedback. Is this something that you thought was useful? Do you want us to keep doing some of these? Was this not useful? Why? What can we do to make it better? But thank you, brilliant panelists, for joining me today. And thank you all for tuning in. And I hope everyone has a great day.
Thanks, Jen.
Thanks, Jen.